Hey everybody, welcome to today's session. In today's session, we're going to cover the principles in which I believe they are very essential in the trader's psychological, makeover, if I may. We're going to cover the principles that make it very easy for you to stand on point in your trading psychology. So if that sounds interesting, please do stick with us until the end. Share with a few friends that you believe the video will be of help to them. Don't forget to subscribe, turn on that bell notification, drop some comments on what you'd like me to talk about next, right? So, cool. Now, let's start off by talking about the basic of the principles of psychology, right? So, psychology is actually just what you perceive the market to be, right? So that means how you perceive the market. Like, for instance, if I say, a man maybe okay, that's a bad idea. Let's just stick with the markets. I wanted to make a gender psychological bias, but I feel like it's gonna be offensive to some people, so I'm not gonna do it. Let's stick with the markets. So with the markets, there's some psychological truth or some psychological points in which if a person understands, it can actually be very easy for the person to actually maneuver their ways into the markets, right? Now, some of them, we're going to cover them today. I'm going to give 5 trading principles that I believe if you live them by them, and if you believe them, understand them, and embrace them, it will actually never be a problem in your trading psychology again. Now, after you actually understand and utilize them, and you still find problems in your trading, then I believe that it's not going to be a psychological problem, but then you're going to be having technical issues with your trading. Obviously, perhaps maybe with your trading strategy, maybe with your risk management or trade management, whatever the case, but it won't be psychological after you actually put these factors into play. Now, we're going to cover the 5 trading truths. So as you know, I don't really prepare slides. I'm just going to type it out. We're just going to type that out. So please bear with me. 5 trading truths to build your psychology, if I may. To build your psychology. Right? So we're going to cover these 5 trading truths to build your psychology. Obviously, psychology is a very wide topic. It's a very wide topic. This will just be part 1. So we are going to be covering more about psychological, topics as time goes on. But for today, let's just cover these 5 trading truths that I believe if you actually utilize them, understand them, and embrace them, your trading will become much more easier, right? Now, first things first, you guys need to understand one thing about the market. This is the first trading truth that I'm actually going to share with you. Cool. Let me do this. The first trading truth is that anything can happen in the market. In the market, right? Anything can happen in the market. You need to embrace this truth. And when I say anything can happen in the market, what I really mean is that anything can happen in the market, right? That means prices, okay, so we understand that we are actually trading using trading strategies, right? So for instance, we are price action traders. So that means, for instance, maybe if prices are approaching a support structure, we actually believe that prices have a high probability of bouncing from here and going higher, right? But this doesn't guarantee that prices will bounce off here. That means that prices also have the probability of breaking below this structure and keep on pushing lower, right? That's also a possibility. So with that understanding, you'll have that anything can happen in the market, right? That means you'll be anticipating to see prices bounce off, but then you also have that open mind that prices can also break below here. If you actually embrace this truth that anything can happen in the market, you'll stop going full margin on trades. You'll stop using the words like prices must, prices have to, those words actually kill a lot of traders. So you don't really want to use those words because as a trader, you don't predict the market. You anticipate and react to how it will act, right? Now, when you start using the words like prices must, the prices will, nah, you're going to kill yourself in the long run. So you have to have an open-minded, no matter what strategy you're using, understand that anything can happen in the market. That means you may anticipate prices to start buying once they reach a certain place, but then there is a possibility that prices will sell. There's also that possibility. So you need to embrace that truth. And once you embrace that truth, it will actually put you in a better position to actually understand, like, okay, if anything can happen, then that means I don't want to put everything I have in this one trade, because if it doesn't go my way, I'm going to lose everything I have, my whole investment. Then it will actually make you start using or appreciate risk management much more, right? Trade management much more, trade management much more, right? So as I said, this is the first trading truth that every trader needs to embrace, that anything can literally happen in the market at any given time. So that way you should always understand that even with no matter what age you're using, you should always understand like anything can happen. So you should always be managing your risks and all that, right? The second trading truth that I'd like to share with you is that it's about an edge, right? Now, what's an edge, right? An edge is a strategy that you're using, right? The strategy that you're using. Okay, cool. That you're using. That's your edge in the market. And the very definition of an edge is that an indication of one thing having a higher possibility than the other. All right, cool. Look at that. What the? Possibility. Cool. What the? How's possibility written, man? Is there? Cool. Now, cool. So what's an edge? An edge is the strategy that you're using. In the market, no matter what strategy you're using, that's your edge. If you're using price action, if you're using ICT, if you're using market makers, if you're using, I don't know, supply and demand, whatever strategy you're using, that's your edge in the market. And your edge, the very definition of an edge is an indication of one thing happening over the other. Like, for instance, here, we are price action traders. So I'm going to use again this as an example. So if prices, for instance, come on this support structure, and then we are anticipating to see prices buy, that's our edge. That means that the support gives us an edge that prices have a bigger possibility of buying. But once prices reach here, and then we understand that once prices reach here, they also have a probability of selling. It's just that the buys have a higher probability of happening over the sells, but nevertheless, the sales can still also happen. So as a trader, you need to understand that an edge or a strategy, whatever you want to call it, isn't 100% guaranteed. It's just an indication of one thing having a higher probability of happening over the other. But that doesn't mean the other thing cannot happen. Now, once you actually grasp and understand this concept, it will actually take away that looking for that holy grail system, right? Because a lot of people are always looking for that strategy that doesn't have any losses, that 100% guaranteed profits. It doesn't exist, guys. If you're doing that, you'll just be chasing a mirage, an image that you'll never catch, right? That's just the reality. You have to embrace any strategy that you use is also going to give you losses. You just have to learn how to manage them. You just have to find a strategy that's good for you. And with that strategy, you need to actually learn how to trade it properly, its ins and outs. That way, you can actually be winning more than you're losing. So that in the long run, you can actually be making money, not losing. That's all. That's all. So that's another trading truth, or that's another trading psychology that if you embrace, your psychology will obviously be on point. Cool. So we are entering into the third. As I said, guys, today's lesson will be very brief. For those that are watching this from YouTube, guys, this is happening live through the webinar that I posted the link in my free Telegram. If you're not in it, the link is in the description. Be sure to join so that you can actually participate in these live webinars that I always host. So yeah, cool. let's take another look at another trading truth. So another trading truth is that you need to embrace in your psychology is that there is an equal distribution. Okay, distribution between L's. I'm going to write it in short form, right? I hope you guys can understand. L's and W's. I sound like hood right now. I sound hood, you know. Yeah, we gotta get them L's. Nah, we ain't taking L's, man. We're taking the W's. We're going home with the W's. We're on the winning team, you know the vibes. So cool. There's an equal distribution between wins and losses. Now, what this trading truth has to build in your psychology is that there is no time that, you know, those people that will tell you, like, for instance, I had people tell me like, Black, I always see you sharing, you know, free trading or free setups in the groups. Please be sharing with us those setups that you believe are actually 100% guaranteed. Guys, if I actually knew this setup is 100% guaranteed, why wouldn't I go margin in? Why wouldn't I go full margin and just double, triple my account? Why wouldn't I do that? Like, it doesn't make sense. So the reality is we don't have setups that are actually 100% guaranteed. Like, you take a trade, but you don't know if it's going to be a winner or a loser. You have to embrace that truth. That means you take a trade, understanding that, yes, this can be a loss, this can be a winner. You just embrace it. Because there's an equal distribution between wins and losses, and you never know when it's coming. Even if you hit 7 losing trades in a row, just believe that a winning trade is coming along the way. Because if you're using a back-tested strategy, your win is going to come somewhere in the future because it has already proven to be profitable in the past, right? So you need to embrace that there's an equal distribution between wins and losses, and you never know when they're coming. So you have to embrace that any trade I take has the potential of being a winner or has the potential of being a loser. So you just gotta embrace that and don't let it, you know, hurt you like you don't really know what's really going to happen in the market. Nah, it doesn't have to be like that, which that also brings us to the next trading truth that you need to embrace as a trader, that you don't need to know what's going to happen next in order to make money, okay? You don't need to know what will happen next in order to make. Cool. So that's another trading truth. You don't need to know what's going to happen next in order to make money. So again, this is generally derived from this one, because in every trade that you take, you're just using an edge. An edge indicates that, okay, here prices has a bigger probability of buying, cool, but you have an understanding that prices can also sell. So that means that you are going to buy, but you also embrace the probability that prices can still come back, sell, and hit my stop loss, because there's an equal distribution between wins and losses. And you don't really need to know even what's going to happen next, because people want to feel safe. You know, we are human, and we have that nature that we want to feel safe. We want to know what's going to happen next so that we can make our moves. But in the market, that's different. You don't need to know, and you really don't have to know in order to be a profitable trader. You just have to believe your edge, that in the long run, maybe, like, for instance, my trading strategy, obviously, you know, I've already sent the facts or the backtesting sheets. It has about a 57% win rate, right? So I know that approximately 60, right? So I know that overall in 10 trades, I'm going to win 6 trades, I'm going to lose 4 trades, right? So that means any time I place a trade, I understand, like, this may be a losing trade, this may be a winning trade. I don't care, and I don't need to know. But I know that over a period of 10 trades, I'm going to lose 6, I'm going to win 5. Over a period of 100 trades, I'm going to lose about 57, I'm going to win the rest. Now, I'm going to win 57, I'm going to run to, excuse me. Okay, cool. So, yeah, JJ, thank you for the math. My head is running a little slow. Yeah, I'm going to lose about 43. I'm going to win at least 57, right? So that's just my understanding, that I know over 100 trades, that's my outcome, my probable outcome, right? And I embrace that. I understand that I'm going to hit L's, I'm going to hit W's randomly. I don't know which trade is going to win. I don't know which trade is going to lose, but I know over the roll, if I compound a lot of my trades, I just know I'm going to win more than I'm losing. Plus, if I use a good risk to reward ratio, I'm going to make sure that if I win much more than when I lose. So that in the long run, even the few trades that I win will actually cover a whole bunch of losses, and then the rest will actually just give me my profits that I'll be leaving off, right? That's the main thing in trading. You just need to focus more on winning, and then once you win, make sure that you actually win much more than once you lose. Therefore, in the long run, you can just be profitable, big profitable. That's the main thing that you need to focus on, right? And that brings us to the fifth trading truth, or the fifth trading psychology block, if I may, that we need to embrace, right? Okay, so every moment in the market is unique. That's the last trading truth that we are going to discuss about today. Every trading moment in the market is unique. And this one goes for the people that, that time in the market, like when you have been maybe in a losing streak or you have been in a winning streak, and then you feel like you're invincible, like you just had like 7 winning trades in a row. You feel like, yeah, I'm the man. I know how the market's gonna go, And then you start to feel cocky, and then you place the next trade. You lose. And you actually over-leveraged or over-traded. I know everybody has been in that spot, right? So that should actually just humble you and understand that every moment in the market is unique. You may have been from 8 winning trades, but that doesn't guarantee that the next trade will also be a winner. You may be coming from 7 losing trades. That doesn't guarantee that the next trade will also be a loser. You just have to stick to the script that there's a random distribution between wins and losses. This next trade that I'm placing may be a winner, may be a loser. I don't care. If you stick with that, you'll actually, even if you come from a losing streak and then you just risk the same amount you're going to risk on every trade that you just took before, you're actually placing yourself in a better position to actually make back what you lost. And if you stay, for instance, after coming from a winning streak and then you still stay to your humble roots, if I may, and you just use the same risk management, you're actually placing yourself in a better place to keep on winning in case the trade doesn't go your way. Imagine if you are winning 8 trades and then you feel like you're the man, and then you over leverage, and then it goes against you. Like you may easily lose everything you just generated over the past 8 trades, which is very bad. So understanding that every moment in the market is unique just puts you in a better place to actually utilize or understand that I don't have to be cocky if I'm from a winning streak, and I don't have to belittle myself if I'm coming from a losing streak, because there's a random distribution between wins and losses, and anything can happen in the market at any given time. So I really don't have to care what happened in the past. If I see a trading opportunity, I'm going to take it with the same risk that I took the others. I'm going to manage it the same way I did, because this is a new trade. New traders are taking this, new volume, new momentum, everything is unique. So that's the last trading truth that I want to share with you guys today. So as I said, today's meeting, I just wanted to be brief. So we have about 5 minutes left. So if anybody has a question, now will be the time about these 5 trading truths that we are just talking about. And as I said, this is just the beginning or part 1 of trading psychology. We'll keep on covering more chapters as time goes. But yeah, for today, we're just going to cover these 5 trading truths to actually start building your trading psychology block so that you can actually take it to the next level. So yeah, guys, yeah. If you have any question, now is your time. Now is your moment to shine. Hey, G2A's, JJ, Becky, welcome everybody. Thank you, Black. Yo, you're welcome, Becky. So okay. Right. What about our Discord? Yes, the Discord, I'm going to start it this weekend. Don't worry, I didn't forget about that. I'll be starting it this weekend. I didn't want to start it in the middle of the week. I don't know. I like starting projects in the at the beginning of the week. Hey Becky, did you get a chance to look at my FTMO account? No, I apologize. I really didn't. I didn't look at that. I was waiting for you to actually text me on Telegram if you sent it. But okay, I'm gonna be on that and I'm gonna get back to you. But please do text me on Telegram so that we can actually communicate easily. So GTAs, we're actually going to be switching between 3 and 4. It's actually not going to be like on Fridays. Mostly we're going to have the session on 4 because the market's just winding up. But other than that, every single day it's just going to be 3 p.m. Eastern Standard Time as usual. It will be 9, not 4, not 9. You haven't taken any trades for the past 2 weeks? Yeesh, I don't know. Look, it depends with your trading style. If you haven't found a good trading strategy or you haven't found a good setup, then yeah, that's patience and that's a good thing. But if you found trading, like you found good trading opportunities and then you didn't take the trade, that's not patience. That's just being, as you just said, frustrated. So that's not a good thing. That's not a good thing. I can't find a bit too. Come on, JJ, come on. I find that hard to believe. Man. We need to have a one-on-one call, man. I need to get your psychology straight. You first need to embrace this psychological truth that we just went over today. Like this one in particular, every moment in the market is unique. I think you're frustrated because of something, or maybe of your trading experience that you just had in the past. Maybe you lost an account, or maybe you went through a losing streak. That's why you're feeling frustrated and you feel like you can't take a trade. But I want to assure you that every moment in the market is unique. You don't really have to be afraid of what's going to happen next. Just believe in yourself, take the trade, pull the trigger. Whatever happens, happens. Losses are part of the game, so you don't have to be afraid of taking trades. You just gotta embrace it and do what's right by you. Cool. So yeah. For those that are joining late, we're just winding up the session, guys. But the session is recorded and it will be posted on the YouTube later on. So don't worry about that. Gerald, welcome. Pascal, what's up? So yeah, guys. If anybody has another question before we actually wind up the session. Okay, cool. So all right. Everybody, I want to thank you for taking your time out of the day to join me today in learning these 5 trading psychological truths to build your psychology. As I said, this is just part 1. We'll keep on continuing learning about more psychological things that will actually help you improve as a trader to actually maneuver in the market, because we understand that trading is mostly psychological, not technical. So with that being said, we need to focus much more on psychology, but we'll also be dealing with technicals, right? So thank you everybody for showing up. I'll be posting this video later on YouTube for those that missed it. But other than that, guys, appreciate you. Have a great weekend. Take it easy out there. Peace.